Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
Nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday. Looks like we just got a transmission from Julie at HQ. Huge sales store-wide happening all month long.
Okay, great. Can you put that away now? It's distracting me from my driving.
One of these days, we need to install autopilot because I seriously think we're lost.
Didn't we get lost last year?
We did, I thought we would remember how to get there this time.
Let's just keep traveling to different galaxies till we recognize it.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning, good afternoon, good evening, wherever you are in the world. Thanks for being here on Election Day 2024. My goodness, it is here. Seems like it creeped up on us real quick. And we're gonna be trading it. We're gonna be taking a look at lots of different ideas and things going on in the markets with what could be a potentially pretty volatile day, right? Of course, we have the election ongoing throughout the day. This evening, we will be live streaming on my channel at 7 p.m. Eastern time. I will be streaming the event, which will be a lot of fun. We're going to be reacting to, states as they potentially go red or blue, and we will figure out, maybe what that means most importantly to the markets for us as traders. We'll be taking a look today at some indices. We'll look at some commodities, check the currencies world. Bitcoin's up 2% here. Feeling silly because I just got trailed out for a profit. Took a small profit there on Bitcoin, but bouncing here off of that same area that I got stopped out of, which is no fun, but it happens. NASDAQ's up just modestly. S&P's, they're about flat here this morning. The Russell's down just a little bit here. Dollar index down a little bit, coming back in to test this support area. We got so much to talk about, so much to prep for here today. It is a very, very key day in the markets. And, we've got two real main events here this week. By the way, we got, several main events. Today we got at 10 a.m. ISM services PMIs, which are numbers that I really like to keep an eye on. So we've got that. We've got the election this evening. We've got the Fed meeting on Thursday. All of these things are going to be very volatile move setters in the markets. And, I want to show you something that is so important to this conversation, guys. It's the put call ratio. Oh my gosh. Do you guys see what I'm seeing? What's happened in the put to call ratio? What is this telling us? Somebody in the chat, help me out. Tell me, tell me what we're doing here. What is the put call ratio telling you today? I'll tell you what it's telling me in a second, but I'm curious to see what you guys think this is telling you. Put call ratio is skyrocketing here, and it just so happens to be on the day of the election. Now, I talk about something in my videos, especially the last 2 weeks. The post-election relief, sigh of relief is, so let me back up. What is the put call ratio? Put call ratio is the balance between the demand for puts, the demand for calls. If this number is going higher, if this index that we are looking at here goes higher, it's telling you the demand for puts is outweighing dramatically the demand for calls. If this thing goes low, it's telling you that calls are greatly out in way more demand than puts. Right now we see puts are in high demand. Why would puts be in high demand right before the election? Market is buying puts. That is correct, right? People are buying puts right now. Now, before you get all conspiratorial on me, I don't know if that's a word. This is very practical, okay? Because what this just tells you is that people are using the options market for its intended purposes, likely. I'm going to go out on a whim and say that this is not people saying the market is going to crash. I think what this is telling you is that the market is saying, I want to buy some protection, right? So let's say you have a $1 million stock portfolio and you say, I don't know about all this Trump, Harris, stuff. I need to take a bet. I'm going to put down a $20,000 hedge. So you go out and you spend $20,000 on puts, right? Well, what does this do for you? If the market goes up, you just lose your 20K. But if the market goes down, if there's a big sell-off, if there's uncertainty about a peaceful passive power, if there is a reaction to a certain president that causes the market to slide sharply, these puts that you spent $20,000 on, right, could be worth $100,000. They could be worth $150,000 very quickly. So what we see here today, guys, and this is very, very important, and I hope this is why you watch the show, is I'm trying to uncover, I'm trying to lift stones so we can see what's under the stones, right? I'm uncovering secrets for you here. This is not really a quote unquote secret, but it's important that you recognize what's happening here. The market is buying protection. The market is uncertain. The market is fearful. And in my personal opinion, it's an opportunity. Now, I am going to say this clearly. Be very careful trading in the next few weeks, because what this is telling you is there's also a very high expectation for volatility. Things could move massively in the next few weeks. You could see gold down dramatically. You could see, gold up a ton. You could see stocks dropping out of the sky. You could see stocks ripping higher, right? The point is the expected move in the markets is being told to you by the options market. The options market is saying, we think there's a big move coming one way or the other. Now, this is not saying, again, don't before you put your tinfoil hat on, extreme demand for put does not always mean the market thinks the market's, it doesn't mean the options market thinks the market's going to crash. That's not necessarily what's happening here. As I said, if you have a $1 million portfolio and you want to hedge it with $20,000 puts, you could potentially hedge your scenario so that if the stock market drops, your puts go up in value to protect your portfolio. That's a lot of times what is what are used in the options market. Options can be used to make speculative bets, but oftentimes they're used as insurance, right? Think of it as an insurance marketplace. So clearly people are out there buying insurance heavily. They may also have big bearish bets on there. Don't get me wrong, right? But we can see it. And it's important that we don't miss this, right? This is, again, why you tune into the show. I hope that I can uncover something for you, keep you in the know about what's happening. Puts are in high demand, massive demand. So on election day, this is no coincidence. People are saying, I don't know what's coming, but there could be something here that's interesting. So if you get a big, so here's the thing. If you get something today where there's a clear winner and the market's not a big question mark around it, stock market's probably going to pump, whether it's Kamala Harris or Donald Trump. I know people are going to have their favorites, they're going to have their preferences, and I get that. The comment section of this live stream today and maybe tomorrow, today and tonight when I do the live stream event, I can't stop the people who are going to make their very politically charged commentary in my chat. Like, I can't stop that. But put that to the side for a second. Let's just talk about something. Regardless of whether you like Kamala Harris or Donald Trump, the point is this. Once that uncertainty becomes a known, markets like that. What's going to probably happen, and I'm saying this now, I could be dead wrong, and you should not listen to anything I say, as always, right? This is not financial advice. I'm just a dummy on YouTube that trades, okay? As long as you and I are on the same page about that, then we can proceed. It's not financial advice. Read the disclaimers on the bottom of the screen and in my description. What I think could happen is that this put call ratio is likely to drop hard after today, right? You're going to have people who are really uncertain. And as soon as that insurance, it's kind of like you pay for insurance for all sorts of things. And 9 times out of 10, you don't need insurance, right? Most likely, we don't get a catastrophic, sort of event tonight. Most likely, that's not what happens. Most likely, there's a winner, the market moves on with its life, and we all kind of go back to being normal people that aren't, political experts on social media, right? That's probably what happens. And then the put call ratio probably comes down. I think, in my opinion, regardless of the winner, there's a bit of a bump that comes into play for stocks in the short term. Regardless, if you think, the stock market is overvalued, it might have just a short-term bump. Will it turn into something more? That's where the Fed comes in. I want to say something. I'm stealing this from someone else that I saw on social media, and I can't remember who it is, so I can't credit them. But somebody said this really important. Actually, I do know who it is. It's Josh Brown, somebody I watch often on YouTube. I remember that. It's not the Trump trade that matters. It's not the Harris trade that matters. You know who it is? It's the Powell trade that matters most. Because what the Fed does next is so much more important in the, actual sustainability of the stock market rally than either one of these, right? Because at the end of the day, this guy is in charge of, he's got the keys to the pocketbook, right? Congress and Powell, they're the ones that move the money around. Now, of course, if it's Trump or if it's Harris, then of course you're going to get, they're the ones that can, check mark things, sign things into action, etc., or veto them. But my point is this, don't get over focused on this. A lot of people are going to go out there and make dumb decisions today. If you're new to this stuff, it's probably a fair day to go take a walk and come back to this tomorrow, to be honest. I remember last election, 2016, 2020, I was trading during those times, and they were very volatile times. So the market here is telling you that. The put to call ratio is the chart of the day, right? Don't look at all your price candle charts. It's the put call ratio today. That is what is telling you the market is very much on the sidelines here saying, what the heck is going to happen? If it's Donald Trump, if it's Kamala Harris, what does that mean for markets? Today's the day. Today is likely to be volatile. We got the NASDAQ and S&P just slightly green, but again, the movements today are likely to be very volatile. You know what else is telling you that? Is the VIX. Take a look at the VIX. Just like the put call ratio, VIX is at 21. This is not a low VIX, right? We're not down in, summer months where we were down in 12s, 13s on the VIX, right? we're almost double that, up in the 20s. At one point, we're almost at 24. So VIX is telling you there's probably some market movement. You know what else is telling you market movement is coming? Look at gold, guys. Gold, I've mentioned this for months. Although I don't currently have a bullish position on gold, shorting it is not an option for me because this thing has just been floating higher on uncertainties, right? People don't know who the president's going to be. They don't know what the situation could turn into in the Middle East and with Russia and Ukraine. There's many, many question marks, right? So during a point where you have question marks, national debt going up, uncertainties about who the president's going to be, all these things combined make a very good bullish case for gold, in my opinion. And that has been the trade this year. I've traded gold exclusively on the long side this year. I've not taken any shorts to my memory on gold the entire year long. Only bullish trades. And I have not played this thing perfectly, because perfect this year would have been buying it here and just not touching it. I didn't do that. So I'm not claiming to have played gold perfectly, but I've caught a lot of these sort of upward motion moves in gold this year. I have not caught this latest one. So I've not partaken in this one. I've been long gold during this period of time, just have not caught it in the most recent time. Part of that was because some of the economic data was coming in stronger than expected. When you take a look at the full picture, which, by the way, we're going to get more key economic data here in about 24 minutes, right? We've got of course, the PMI numbers, which are going to be big. By the way, this put call ratio is available within the Edge Finder. Edge Finder is currently on its biggest sale of the year. Hey, perfect timing. The election, we got everything going on. This is the time to get your tools if you have not already. And yes, this is a sales pitch. I won't shy away from it. This is a wonderful tool that we've worked on for the last few years. Our team has done a remarkable job putting things like this together. We've got the dream team over at A1 Trading. We're building some of the best tools in the marketplace right now for traders all around the world. We got people in every continent, maybe not every country, but almost every country using our tools to improve their trading. If you want access to the top setups algorithm, see the top ideas that are being generated by the Edge Finder's internal algorithm. If you want to see the commitment of traders data in depth with an easy to use user interface, if you want to look at the put call ratio, keep an eye on this yourself so you don't have to hope I pull it up in a live stream. All of this is on super mega sale. It is 40% off right now. And for today, with the election stream, 45% off is available as we speak for a very limited time. If you want that extra 5%, the biggest discount of the year, there's the link, guys. Click that link, send us a direct message, and someone from our support team, while we're live streaming, we'll get you that extra discount, 45% off. It is a one-time fee to get your access to the Edge Finder. You unlock all of our powerful data, and you get into the tool that, when we started this tool, the goal was to do this. The goal was to build something that hedge funds would build for themselves and keep it to themselves. We're trying to build something to the retail trader that can actually dive deep into some of the economic data that is so important to the markets that most traders completely ignore, right? We want to be able to see things like the put call ratio. We want to see where retail is positioned. We want to see where smart money is positioned. We want to see what seasonal trends, like something else that I think is potentially a bullish catalyst for stocks going into Q4, right? Is the Q4 seasonal trend. This is something that we've observed. It is not a opinion. It is not a hopeful wishful thinking. This is statistically something that most years, not every year, but most year happens. We have a bump in the NASDAQ and the S&P 500 in the fourth quarter, right? This is not something that, again, I'm not guessing this. I'm not wishful thinking. I'm telling you that if we observe the historical price performance of the NASDAQ, of the S&P 500 in Q4, this is an observable trend. Last year, this was the most profitable period of the year because I was very bullish on stocks during this time, and it was one of the best things that I did all year long. How did I come to that conclusion? Software. The power of software is it can help you uncover important things that if you're only looking at a technical chart, you can completely miss. The tool, in my opinion, with the right risk management, with the right approach, and with, somebody who has some experience in this stuff, pays for itself 10 times over. Now, again, it's not going to tell you what to do and make you a rich trader without any experience or effort. We would never claim that. This is not a magic formula tool. It is simply something that allows you to take a more comprehensive view of the markets to make more informed decisions on the trades that you're thinking about taking. So don't miss it. Again, it is our biggest sale of the year. We're doing 45% off during this live stream. So if that's something you're interested, we'll drop the link one last time here so you can get the biggest discount of the year. Okay, so NASDAQ is up about 0.66%. I'm going to be doing some stuff here today on the stream later. Again, I just want to do a quick plug too. Later, we will be streaming at 7 p.m. Eastern time the event itself, as some of the votes get tallied up, as we get into the presidential election stuff. I'll be there with you the whole day to go through some of that stuff live on camera. We'll be taking a look at sectors. We'll look at commodities, gold, silver, oil. All that stuff is going to happen this evening. So if you are not already, subscribe to the channel. Subscribe, number one. But number two, turn on post notifications so you get notified when we go live. The live stream will be taking place at 7 p.m. U.S. Eastern time. Some of you guys, it'll be real late in the evening. But if you want to stay up, pour yourself some coffee, sit back in your chair, hang out with Uncle Nick. I'll take care of you. It's going to be a great time. See you guys there. Okay, so sectors wise, we got XLV. This is the healthcare sector coming down here recently. I'm curious about that. It's a sector I like. Basic materials pulling back. Staples also pulling back. Real estate, I've been flat on this position. I actually had a really good initial move on this trade. It's come back since to where I've initially bought it. So I'm flat on this one. Take a look at XLU. This is the the utilities sector, has been pulling back here recently. This one's very rate sensitive. So is real estate. These two are very rate sensitive things. If you think rates are going to come down, healthcare, real estate, utilities, technology, some of the more sensitive areas to it could see a serious move. I am long semiconductors, which is a high risk, high reward trade. Part of the reason, I'll say this, part of the reason I like semiconductors is because it is a bipartisan thing that the U.S. continues to lead the way with the semiconductors and AI trade. It is imperative to the next chapter of global financial markets that the U.S. takes the charge higher, and both Democrats and Republicans agree on this. They don't agree on everything. I don't even know what they do agree on, but this is one of them. The AI trade is very important. So this is part of the reason why I like semiconductors. I'm not telling you to go buy them because they're super high risk. They could drop massively and I could lose a little bit of money here. Now, I want to preface this. I'm not risking my whole account on this trade. I work with a larger capital basis. You should do your own due diligence, do your own homework. You probably shouldn't trade at all today. I'm not here to tell you what to take trades on. I'm here to do what I'm doing and share my opinions on it. But I like semiconductors as a space, for better or for worse. That could get crushed today, or it could do really well. But I just want to preface that I do think that this is a bipartisan area of the market that I like. It has massive growth. It is high risk, high reward. And I have a stop loss in the trade. So if this thing gets crushed, right? If the Fed comes out and kills the party, or maybe the market doesn't like something with the election, semiconductors could have a substantial drawdown or a substantial sell-off. I've got a stop loss on the trade. I know what I'm going to do if I'm wrong, and I will admit when I'm wrong. And it's really important as traders that we do that. One of the biggest mistakes traders can do is never admit they're wrong and then just get crushed by some bad position, right? So I'll admit if I'm wrong on this one, and I know where I'm going to admit that because I've got a stop loss placed on my trade to mark that level on my chart clearly, okay? Just wanted to highlight that. I'm also long the NASDAQ. This is a trade that I shared in the VIP room. All of the trades that I'm taking are shared in our Discord, by the way. That is also 40% off for our Black Friday sale. We'll do 45% off if you send us a direct message while we are live streaming this morning. So silver's another one, came down to a key level of support here. We'll see how this if this can continue to react positively. I'm a little cautious on the metals, guys, because again, once you get past the election uncertainty, just like the put call ratio is telling you again that the market is positioned for, it's paying for insurance right now. Gold is also insurance for a lot of investors, a lot of traders. Gold is an insurance policy. People buy it as a uncorrelated bet to the stock market, or perhaps a asymmetrical potential return in the event that you get some sort of global crisis, right? Gold plays that role for many investors. That being said, when this presidential stuff passes, in my opinion, is we will probably have a good idea of the president, and I'm fingers crossed, hoping for democracy, that there's a relatively peaceful passive power one way or the other, because we know we're going to get a new president, even though one is the standing VP. We know there's going to be a new president here. Both we've seen in office, but one is either going to return or one is going to stay in office but get a promotion, right? So we'll see how that plays out. But my opinion here on gold is that once you get that premium that gold is collecting currently for the uncertainty of that event, once the uncertainties become known facts, gold, I think, potentially rolls over. And I'm not calling for a big short, of gold, or a big crash of gold. I'm just saying I don't love the idea. I am bullish, but not up here. I like the idea of buying gold if we get pullbacks and we get potentially some economic data starting to cool off. Yeah, I like gold and potentially on the long side, but at current levels, I just have no trades, and I don't really want to go into, the election betting that we're going to get some crisis of an event, which would make gold skyrocket, but it's not something that I really see. And again, I'm not a doomsdayer on this topic. I'm thinking that likely we'll get a presidential candidate become the president that will pass, and let's just hope for the best on that front. The bigger question is, in the next few months, if you get a change in leadership, what happens in some of the foreign affairs, right? What happens in the Middle East? What happens in Ukraine and Russia? Those are question marks that potentially could mean gold continues to go higher. Now, somebody pointed out to me that gold on the election of Trump last time got sold heavily. I looked at the chart. I went back to 2016, around the time of Donald Trump getting elected back then. And you can actually see there is some validity to that. Here is the November period in the previous, when Donald Trump became the president. You can see there was a big drop off in gold, but it was temporary. There was a rebound in gold prices. They went sideways, and then ultimately in 2019 and 2020, they ramped. So, for me, I'm not really seeing a huge catalyst for downside. Perhaps maybe there's another, if Trump were to win, a downside move in the short run for gold. Same thing for, Kamala Harris. I think that just the uncertainty of the presidential election being behind us, and that uncertainty becoming, sort of known facts, I do think that causes gold's price to potentially have a short move down, but not necessarily a lasting massive effect one way or the other. In fact, I think that here's my scenario for if Donald Trump gets elected into presidency. I think you probably see a short run move to the downside, and then gold kind of continues what it's been doing, irregardless of who the president is. I think there's bigger forces at play. It has a lot to do with the Fed, has a lot to do with international sort of affairs, things like that. Guys, we got about 10 minutes here to go before PMIs. We got Forex James going to come in here and take over the show for a few minutes. I'll be back with PMIs. So what we'll do here, I just mentioned this a moment ago, our Black Friday sales currently live, 45% off the Edge Finder or our VIP signals. Either of those are available. If you have interest in getting either one, now is the best chance all year long to do so. We'll drop the link here in the chat so that you get an access to those. Just chat with a member of our support team. We'll set you up with a copy of the Edge Finder, VIP, whatever you want, for the biggest discounts of the year. Now is the time. Come join us. All right. Stay tuned here. We'll be right back with James in just a second to take a look at the market. Stay tuned.
Looks like we're receiving a transmission. I think it's an alien, which is pretty cool.
Okay, all right, I'll go check it out. Beam me up. Whoa, hey guys, I come in peace.
Hey, you're back. What happened?
Well, they gave me this.
The A1 Trading Stock Box, an advanced market scanner of top stocks, ETFs, insider trades, and analyst ratings. Unbox smarter insights and discover opportunities with powerful data at your fingertips. Get your stock box today with our out-of-this-world Black Friday sale happening all month long.
See ya. See you later.
Hello, hello. How is everyone doing? I hope you're all having a great Tuesday. Great start to the week. So, big day. It's a day we've all been waiting for, really. Whether we'll get the results or not, I don't know. Today, obviously, we might get them. From what I understand, it might be 1 or 2 days after, but we'll see. They gave Nick a laptop. Yeah, those the A1 promo videos are always they're always quite funny to watch. Whoever plans those does a great job. So as we go into the elections, we currently have a very bullish yen, actually. Very bearish yen. Very bullish aspect on the yen pairs. So we've got Euro yen, Australian dollar yen, New Zealand dollar yen, Swiss yen, and pound yen, all reading bullish. We've got the CAD Swiss bearish. The Nikkei's been in the same place for quite a while. It's still reading bullish, not overwhelming. We've got the FTSE bullish as well. Although the FTSE is a bit pants. It's one of the worst assets. So couldn't care less what's going on there, to be honest. Is there any site with live voting situation? I don't think so. The closest you would be able to get, I think, is Polymarket. I think it's a crypto betting website that you can bet on the elections, but I think that's really as close as you can get. Phantom, good to see you. Phantom, are you the same guy that's in the Discord? I'm not sure. I keep seeing your name popping up. I'm not sure if he's the same guy or you're a different person. Just before we go further in, an update on the portfolio. So we managed to recoup, obviously, the drawdown that I had during this period. So now up 2.4% this month. So in the first 4 days, I've not traded today. I've got a position out here open on Ethereum, 1.69 last month and 2.3 the month before that. So it seems like I'm going to close out the year relatively nicely if we can stay on the track. Politico has a live map that is filling out. Interesting. Okay. Is trading the election risky? Yes, I'll go into election trading in a second. Hello, James. Hello, Phantom. It is you. Good to see you. Dup that thing. Hello, James. Short, sitting on my hands. Good stuff. So the reason that trading the day of elections is risky is not necessarily because we're going to get huge spikes, which definitely could happen. But the main reason that trading elections is just a bad idea in general is because of the sort of volatility in the market. It can spike heavily. So, for example, if you are sat at JP Morgan now, you're not going to be putting millions or tens or hundreds of millions into positions right before the election. If anything, you're going to be profit taking. You'll be sat doing research for the future. You won't be opening positions right now. So there'll be a lack of liquidity going into the markets. And again, if anything, it will be mainly profit taking. The banks will also be filling orders for clients. But again, that's not really enough. That'll be more of a 1 minute time frame type of thing. So again, it's not the wisest idea because let's say you can sit in a trade, it might just range for the next couple of hours. And then the election comes out, let's say Trump wins, the dollar goes in a rocket ship and you've just been shorting it because of a technical setup. So yeah, it's kind of gambling, I would say, just because we don't have a full view of really what's going to happen. Again, my portfolio is completely flat except a position trade I've got here on Ethereum. This is a weekly time frame. I'm planning to hold this for quite a while, although the swaps are already eating me alive. So actually I might close out of this one. We've got, I think, increase in swaps on Wednesday. So yeah, I might not hold this one. James, what's your YouTube channel? It's just my name. Search in Forex James, you'll find me. I don't really post too much there. I post a weekly watch list and things, but I'm not as active on YouTube as Nick is. Something I want to do, but it's difficult. It's time consuming. Stockbox has insider trades. Yeah, I need to get the Stockbox before the Black Friday discounts over. I wonder if I can use my own discount code for a Stockbox. There you go, guys. If you want even more, if you want an even bigger discount on the Edge Finder, I think it works on Stockbox as well. You can use code ELITE. It's 45% rather than the standard 40%. I've got the plug. Oh, I am the plug, I guess. Why are there an increase in swaps on Wednesdays? I'll be honest, Laura, off the top of my head, I actually can't remember. Let me just double check this for you so I don't give you false information. Financing charges are tripled on Wednesday night. Adjustments. Sorry, hold on. This adjustment accounts for weekend when no swap rates are applied. There you go. That's right. So essentially, when you hold over Saturday, Sunday night, you obviously aren't paying swaps because markets are closed. So Wednesday makes up for those swap fees. Euro Australian. Actually, there's a little bit of juice with Euro Australian. Now, unfortunately, I can't show you my source, so you're going to have to just take my word for this. But let me just double check who it was before I go in. It's Morgan Stanley is currently in a short position on the Euro Australian. So let me just take the stop loss here. So their stop loss is at 1.68. 1.68. Take profit is at 1.525. And their entry is quite high, I think, as well. Let's see here. 163.72. There you go. So that's a position that Morgan Stanley is in right now. I was looking at this. I was very tempted to just follow in their footsteps and take a short position. But as always, being the due diligent trader that I am, I had to go and check out the Edge Finder. So if we have a look and see what's going on here. Actually, let's first check COT. So Australian dollar, actually kind of flat, decrease on longs and shorts, nothing interesting. The euro actually had a large increase in short positions or short contracts, I should say. So that's decent. So that's one factor. But again, I looked at the overview for Euro Australian here. Seasonality is bearish. Retail is short. Oh, actually, maybe I was looking at outdated information. Actually, it doesn't seem too bad. The only thing really is that it's got a score of 1. It's not really a bearish score or bullish. It is sat at neutral. So for me, it's not quite there in terms of being ready to enter. So if we can get possibly a weekly candle bearish close, I might consider it. But again, not going into the election. Not wanting to trade as we go into the election. Will gold consolidate in 2025? I'll tell you what, Gold Trader Pro, why don't you tell me if you're a Gold Trader Pro? Or if you really want me to, I'll call up the Middle Eastern guys and tell them that Gold Trader Pro wants to know what's going to go on. I'm joking, of course. I don't know. It depends. We'll have to see what happens. Really can't answer what gold will do for the whole of the year. Why Wednesday though, of all the days or weeks? I don't know. I guess some old white man decided it was going to be Wednesdays and everyone just went with it. Pound CAD looks interesting for shorts. I would short if it wasn't the election. Pound CAD, let's see. Last time I checked, it looked quite good to go long, but I haven't really checked since. For me, there's nothing here. The H1 is just ranging. Daily isn't really doing too much. Is also essentially just ranging with a slight move to the upside. Weekly is also in a range. Even the H4, there's nothing really there. Maybe catch these sort of moving average pullbacks through here. But yeah, other than that, I don't see any sort of setup here at all. Canadian dollar, I would expect to continue losing value though. So if we look at the seasonality for oil, let me see if Edgefinder has oil seasonality. I'm not sure if it does. Let me just double check. Oh, it does. That's cool. So yeah, seasonality on oil is actually very bearish until December. So if we do see the sort of seasonal factors towards oil come into play and continue the downwards pressure, Canadian dollar could be quite a nice short position. Hello, Nick.
What's up, James? Yeah, we get seasonality on pretty much everything on the Edge Finder, which is always fun to see what those are looking like. James, I'm just jumping in because we've got PMI numbers here coming out in just about 30 seconds that I wanted to just react to. This is, of course, services PMI, which is actually quite important. It's a large component of the U.S. economy. We're a very services based economy, so we got our breaking news coming in here right now. Got everything pulled up for us here. Stocks on the left: gold, silver, dollar, oil. Stocks initially higher here on the services. Gold down a little bit. I don't know how much this matters today, simply because of how much there is going on. But last time it was a big beat for services PMI. Let's see if we can get a forecast. Look at that, 56. My goodness.
Oh, wow. Nice.
Services PMI did not miss yet again. Actually, that's another strong beat. Yet again, another, last time around, James, we had a 54.9 reading. I think the forecasts were like 51. So 53.8, we're expected to drop a little bit. We actually bumped up higher yet again. That is a strong indication of, U.S. economy outlook being positive here, which is, real interesting. So we've got stocks and NASDAQ, in specifically not moving too much off of that. That's putting a little bit of a dampening move on the gold market here this morning. Same thing with silver. Oil staying strong on that. Dollar index, a little bit of a bump on the hourly chart. So, still, I think that the market yields today to the election story, what's going on there, as well as the Fed. But again, more signs of, U.S. economic resilience is going to keep the dollar, relatively stable, but specifically might continue to keep stocks on the northward bound, if you will, when you get those numbers. So just wanted to jump in there and share that here. What are your thoughts on everything here, James?
Yeah, the US is looking okay. I mean, the only sort of headwind for me was the NFP release. Obviously, unemployment stayed as it was. We just had services PMI come out quite positive. So overall, the US dollar is looking quite attractive, but we'll have to see. Obviously, after the election, that is the the key thing at the moment. But yeah, I mean, separating the election for this statement, I think the US dollar does look quite attractive. The data is definitely supportive.
You've got a move here of 1% up on the NASDAQ here today. S&P's up 0.75%. Russell up 0.75%. Dow Jones 0.5%. I mean, the question is, James, I was just discussing shortly before you came on. I know a lot of traders here are very fixated on their gold trading stuff. The big question for me is that when Trump got elected the first time, the gold market shot lower. I didn't check the last time around when Biden got elected, but I do think that there's a bit of a premium here in the price of gold. I've discussed this a lot. That could come out of gold on the uncertainty becoming known, right? That idea that when you don't know who the president is, people buy gold in anticipation. They buy puts as protection in their stock market portfolios. And then when that becomes known, it may sort of work the inverse direction, right? Do you think there's any of that going on?
Yeah, I mean, I think the way I see it, it depends on investor sentiment. Well, obviously, but if we look really at what Trump is known for, well, it's first of all, he's a businessman. But if you look at a lot of his statements over the past sort of couple of years, it's Russia wouldn't have invaded Ukraine if I was in power. Putin would listen to me. Iran wouldn't have had the funds to do what they've done if I was still in power. Or he's got this thing about peacekeeping, essentially. Now, whether he actually does it or not, I don't know. But if it's perceived that he does get, or if he does get into power and it's perceived that he could go and fix these issues, that's a couple of things off the scorecard for gold. It's the election's done, and it's a better sentiment around global tensions, which obviously could then start decreasing some of the investor appetite for gold. So it's definitely something to keep in mind as far as I'm concerned.
Yeah, no, that's fair. The question too becomes, I think, with both of these candidates, spending, and I've talked about this a lot, regardless of today, whether or not we get looks like a Trump campaign win or looks like a Kamala Harris win. Regardless of that, look at yields. Yields are just continuing to skyrocket here. And I think that this is just the bond market saying, look, both of these, we've seen both of these in positions of power, both of these candidates in positions of power. They both spend a lot of money. And that is making bond participants say, I need more on my bond for me to buy it, right? More yield on the bond. That's how bonds trade, guys, where it's an auction house. Think of that. Bond investors are accepting or denying the current yields offered. So if you were to go sign up for a 10-year treasury bond, you're going to get 4.35%, let's call it. Some investors, well, clearly the market said we're not comfortable down in these areas because things might be inflationary, right? We're going to erode some of those gains we would have made on those coupons from the bonds because inflation may not be going away. Both presidential candidates have a track record of spending a lot of money that is potentially inflationary. So it seems like the bond market is saying that. Whether that trade continues, if you get a Trump victory, many of his critics and people who are uncertain about what his policies could do are challenging the idea of the tariffs potentially being inflationary as well. If you get tariffs and they're very inflationary to the story, yields could also balloon higher, and that causes a potential question mark for the stock market. That being said, I'm not all negative here. There's also the positive scenario of less regulation allowing U.S. businesses to innovate and grow faster. So there's a bit of a nuance here, right? And I think that's why, when we pull up that put call ratio that I keep referencing, that's why we see uncertainty here. People are not really sure what we're going to get from which president. And, the tariffs thing is a question mark, right? Sometimes economists are wrong. Clearly in 2023, economists were like forecasting like almost a 100% chance that we would get a recession this year, that year. We did not get a recession, and we also didn't get a recession in 2024. So that uncertainty, that unknown, is why there's volatility in the markets at all.
Yeah, absolutely. Yeah, I agree. I think the worst time to be in the markets is when there's uncertainty. You need to have clear sentiment from investors, or larger market participants to obviously drive the trades that we piggyback on. And if we don't have that, then it's kind of a bloodbath, really, especially for the smaller retails that rely on that sentiment to drive the trends.
Yeah, exactly. So it's an interesting time. We'll have to see. Oil prices are up by 0.65 here this morning. Copper commodities in general catching a little bit of a bid this morning. Bitcoin up 2.6%, Ethereum up 2.1%. Euros up a little bit, pounds up a little bit. Seems like a little bit of dollar weakness here this morning, which surprised me a little bit with yields up so much, right? You got 10-year yield up 1.6% here this morning. So quite the moves here across the board as we count down the hours. Are you going to watch any of it, James? I know it's probably really late for you.
Yeah, I think it'll probably be around 11 p.m. I'll probably tune into your stream, might watch it in bed. So yeah, I might make an appearance tonight.
Yep, it'll be fun. We'll see all the craziness, and I probably won't go super late into the night, but I'll at least try and watch a little bit of the states turning red or blue and just see what happens. But should be interesting to say the least. Got some interesting stock moves up. Tesla 4%, Google's up a little bit, Amazon's up a little bit. Let's see. Oh, Palantir. I don't know if you track Palantir at all, James. This company does, they build like AI technologies for businesses, and they have a lot of government contracts. It's up 20.5%. This thing is a beast mode. It's a very popular retail stock. And, sometimes popular retail stocks do very, very well. Tesla is a popular retail stock that ballooned higher, but this thing is just on a tear. Do you track any stocks, James?
No, I don't really, to be honest. Is Palantir the one that Frank was in?
Yep, he's in Palantir, and he's
still in it?
Probably having a great day. Yes, he is.
I can imagine.
Yeah, he's in Palantir. That's been one of his favorite holdings, and my goodness, there goes 21.5%, like right in front of us. They had killer earnings, just smashing expectations, and putting up great numbers is sort of what you have to do in this market right now, as stocks are already up. But stocks trading higher across the board. You got SoFi up, Tesla up, Nvidia up, Airbnb. A couple names that I like. Real interesting just to see some of the individual, this is what they do. Palantir, they build a bunch of, I would say the reason it is such a bullish stock is that this AI thing, right? A lot of people are uncertain if AI, where the return on it is, right? There's this huge investment in AI. Where's the money at? Well, the cool thing about Palantir is that they build AI technologies that help very efficiently sort data and improve systems. They have huge government contracts. This company's got a huge demand, and it's because some of the companies out there that are already implementing the technologies that Palantir builds are seeing return on investments, right? That's the excitement here, is that AI is a big, fancy sounding concept, but where's the return? And companies like Palantir stand to gain a lot if they can continue to return. I mean, think about it. It's like if every business could plug into Palantir and generate more money, that company's worth bazillions of dollars. So them hitting great numbers, seeing great returns is very positive. I wish I owned the stock. I don't own the stock. I wish I did.
Yeah, I'm looking a little bit jealous.
Yeah.
But stocks are just not something on the radar for me, unfortunately. It's one of those things. I'm so busy looking at currencies, commodities, obviously business and things. I just can't mix in more things.
At some point there's too much to look at, so it's totally valid. I have a basket of stocks that I trade very frequently myself, but mostly on the options side and mostly as sort of longer term holds if I can get sell cash secured puts, get a sign, things like that. But plenty to look at regardless of whether you trade individual stocks or not. There's indices, sectors, commodities. There's just no shortage of things to keep an eye on. And of course, currencies, which adds, multiple ideas at the same time. What's this chart you got for us?
Oh, this is currency strength. So we've got the British pound currently in leading, Swiss following. We've got the yen weakest, Canadian dollar also quite weak, and that's about it really. We're not in a very clear risk on risk off market. We've got the Swiss and the yen outperforming. It's more a case of it's actually looking quite standard with the pound, the Swiss, and Australian dollar in the lead.
Yep, very interesting. It's kind of hard to say. Today is a weird day because what you're seeing a lot of is not necessarily risk off or risk on. It's sort of just positioning, some insurance buying. I keep coming back to that put call ratio thing because you can clearly see there was a huge demand for puts in the put call ratio here, just telling you that people who, maybe in their portfolios, I mentioned this earlier, maybe you have a portfolio active of stocks, of bonds, ETFs, whatever, and you just want to hedge the potential downside volatility. So you buy some puts. That seems to be what's going on. I think what a lot of investors may be doing is they have a big portfolio. They're buying some put options as protection, and they're hoping that they don't actually need that protection. It's kind of like actual insurance, right? When you pay for insurance, you're hoping you never actually need to use the insurance because they try and not pay you out anyways. So that's the difficult thing about insurance. But same kind of concept here with the put call ratio skyrocketing. We'll see where that goes from here. But I think that there's a bit of a premium baked into a lot of charts right now, which causes some really potentially big swings in the next few weeks as that unwinds or realizes that volatility.
Yeah, it'll be messy for sure, especially if you're positioned wrong. But on the other hand, when it can always be messy, there's always room for money to be made. As long as caution is taken, guys, I think it should be fine. Just don't try and fight the trends and fight the movements.
I like this chart you have too, James. Is this something that you've built manually here?
Yeah, so it's just
Nice.
the call out box in TradingView. So I just mark up every major US news release. I use it just obviously for these streams for followers and things, and for me it's easy to put the jigsaw piece together really without having to do too much.
Yeah, I like that. Just getting a little bit of a visual map of all the key pieces of information that are happening. James, we've got Chris Pulver coming up next, so we might yield to him here, let him take over here for this show. I want to thank you for coming on, and for everybody who is listening to us here live. If you guys would like to keep up with James, he has his own YouTube channel. We'll drop the link to that. You can also find him and his services at elitetraders.io. That is his website. And he also has a promo code for the Edge Finder. It's code ELITE. So use code ELITE. You get a nice Black Friday discount there on what you got there for our Black Friday sale. So James, thank you very much for coming on the show today, man.
Thanks a lot, Nick. Have a great day, guys. See you later.
Thanks. See you, man. All right, guys. Yeah. So next we got Chris Pulver taking over the show, taking a look at some markets here as we count down the hours at this point now to where we start to get some of the election results. And again, I want to just encourage caution. This is likely to be a very volatile day, very likely to be a volatile week. I do definitely think that it's a challenging time. I remember this exact conversation back in 2020. Very challenging time for new traders to go around and gamble without knowing what they're doing. I would encourage you to stick to a demo account. If you are not a profitable trader, this is a time to exercise caution and don't go around YOLOing your account, because it could wake up with a headache tomorrow, if you will. Anyways, we got Chris Pulver taking over the show here in a second. I just mentioned that you guys can get access to the Edge Finder and the VIP room. It is currently all on super sale for the Black Friday discounts. You can get 45% off while we're live streaming if you send us a direct message. Send us a DM right now here on our website. This will connect you to a real person on our support team. If you do so, we'll get you 45% off on whatever you want. You get access to the Pulver alerts, which are up next. You can see Chris Pulver. You can see all of his trades. You can get access to Gold VIP membership, which gets you access to all the trades that I'm taking. Every signal that I share goes directly to your Discord, to your mobile phone, to your desktop, etc. You get access to the Edge Finder and all of its powerful data, all in one single browser-based terminal for a one-time price. All of it is 45% off. It's the biggest sale that we do all year, so don't miss it. We'll take a quick break here, and then Chris Pulver taking over the show just after this. Check it out.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A Pulver alert?
Yeah, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey everybody, how we doing? Happy Tuesday. Happy election day. Just posting a message in the Pulver alert section. Just posted that in my index trades, adding a position on RSP and adding a position on QQQE. Pictures posted. I'm looking at these from a dollar cost averaging standpoint, and this is what it looks like. So take a look at the SPY at 574 versus RSP at 177. So it's a fraction of the price. It's not as liquid, not in a bad way, but I'm dollar cost averaging as opposed to trading options around it. I'm putting $1,000 position in an RSP with a bit of this 3% pullback we saw since the recent highs. I'm also putting in a level around a 6 or 7% pullback around the 200 moving average. So here's my trade on RSP. So I bought it at 177.20. And I mean, if you were to settle for the trade right now at 177.47, that's still okay. That's acceptable. The other levels around 170, which I'm looking at this 200 EMA around 168. So I'm okay getting filled there. The idea here is if we have additional rotation going into not just the Mag 7, not just the top 10, not just the highest concentration of stocks, but actually broadening out into other sectors, then the RSP and the QQQE should hopefully perform pretty well. They're also a fraction of the price. So, QQQ at 490, I can buy a lot more bang for my buck there at $90 and see if it's going to outperform. So, or even match performance, but do it at a fraction of the cost. So I'm buying some shares of QQQE and I'm buying some shares of RSP. They're two little dollar cost average allocations. If we hit some all-time highs, great. If we pull back, finding some support, there's an extra level that I would add to it. If we pull back to this August 5th bottom, then I'll probably add another trade around $82 on QQQE, and that would be from high to low, maybe a double-digit pullback. So from this high to this low, that'd be about a 12% pullback. I'm happy scooping up some more shares there and just continuing kind of this dollar cost averaging. And then same thing on RSP. We're at some decent levels at the 50 period moving average. I'm buying that now. I'm going deeper between the 144 and the 200 moving average. If we came all the way back down to this August 5th bottom, that'd be around 162. I'd say 162 to 160. Happy to scoop up some more. And that would be, for me, 1, 1, and 1. So about $3,000 position. I'd probably have like a 8 to 10% discount on the all-time highs, and it's not super expensive. Also, if I own enough shares and I can trade at least an option contract, then I can lower my cost basis as well. So I'll keep an eye on that. So intraday, price has come right out of the gate swinging with the daily trading range around 48 points from close yesterday to high today. I'm hoping that as we're in today's session, price either comes back to this little black line and gets me back to center. That's a trade I have in SPX this morning. If it goes higher, I have a stop loss in just in case. But if price just goes sideways, that hopefully time decay is going to work in my favor to grab some profit. We'll see what that does. I'll keep an eye on that one for the morning. I put in some trades yesterday. Let me see here. I'll look through my trade alerts. So in Forex, I put in some pending orders on the New Zealand dollar. Today's currency strength chart is actually showing Aussie is strong. New Zealand was second strong. Pound dollar, I'm currently long. We've got the Swiss and the dollar. We'll keep an eye on those. I would say this: expect a lot of volatility for today, tomorrow, Thursday. I keep saying this, but I posted a video on TradingView yesterday that went out to my YouTube channel and Twitter. To me, I'm looking for pullback levels. I've got lots of cash at the ready if we have some decent wicks and some nasty pullbacks. But I don't know. This market might just be sitting here with this slight, 2, 3, 4% pullback and just waiting for the election to be over with until it decides to try to go higher. I just think we have to be mindful of the potential drama that's going to happen this week. Case in point today, if you're watching, live election results, look, there's going to be some reds and blues that are going to be printing here in real time. If we don't have a declared winner tonight from the Electoral College standpoint, and it's going to take, states potentially days upon days upon days to get in their votes and their counts, and people are still waiting in line, all throughout the night. Who knows? Nobody knows what voter turnout's going to be. But it's going to be interesting to see how the betting markets that set the lines that, we saw like Polymarket and Kalshi, or I think Kalshi is one, Kalshi, I think is the other one. But anyway, those were calling for like almost a landslide victory for Trump, like 58 to 63% is what I saw. But then you look at 538 and 270 to win, things like that. That's an interactive map, but 538 had the polls pretty even at like 47, 48%. So nobody knows. I just think if the market doesn't get a clear winner today, doesn't get a decision, then there's more indecision volatility ahead. We also have the Fed coming out Thursday, which is expecting to be another rate cut. And we just want to keep our eye on things, So I'll be watching this unfold throughout the day, throughout the night. We'll see what happens. Currency strength chart, interesting risk on rally. We saw China doing pretty well overnight. Here we go. So that's part of the reason my portfolio is up a pretty decent amount today. I'm up about 18 grand. A lot of that is just based on China being better positioned. So HSI up 2.14 today. BABA gapped higher. It's a red candle on the day, but did gap a little bit. So hanging into that 1.38% move. Baidu, same thing, gapped a little bit higher. It's a red candle. FXI hanging in there at 32.50. I'd like to look and see. I got 57 cents credit and 27 cents credit. I think the debits might be still a little bit high, but I want to check those positions and maybe just close them out. I am, $1.51 above this strike price, and I am $2 above this strike price. So if I can close these out for a partial profit, I may, because I'm in like 10 contracts in each one of these. K-Web, again, gap higher, but fading. JD, slight gap higher, right around $40. I'm trying to get it called away at 42. I put a trade in on Intel last week. I'm monitoring this one towards the end of the month. I'm watching Pfizer. I've got Pfizer out to January. I'm trying to get this one called away like week to week. I've got I think it's 11/8 expiration on Pfizer. Yep, I hear you. Blue Boy says, hope it's not a confusing mess tonight. I do too. I hope it's just, if a declared winner happens and it's a smooth transition of power and it's not a contentious, like, no, I don't trust the results, or it comes from either way. I mean, just my opinion would be Trump would maybe more vocal about, the election is rigged, and Harris would be like the Democratic monster in the background's like, we're just going to take days and days and days to trade, or to collect all the polls and get all the results. And I don't know, there could be all sorts of weird stuff happening. So it sucks to think that voting is now skewed, or voting is now potentially rigged. It's like, is it misinformation? Maybe. I have no idea. And I'm not here to start some conspiracy thing and, well, I know this is happening. It's like, I don't, and I don't care. It's like, if you have a voice and you can vote, go vote. That's how you can express it. Now the results, I'll live with them just like everybody else. And we'll figure it out. But we'll see. So hopefully it's just, like I said, if it's a smooth transition of power and a declared winner, easy peasy. So this is what I'll be just monitoring. I don't know if the currency market is going to be nearly as volatile. We might see some action on the dollar tonight, possibly. But as we've seen, I mean, take a look at the dollar index. We've been watching this obviously for the last couple of months. This is not giving me the confidence to say the dollar is going to get weaker. I still, even with the Aussie turning up today, I still like the levels that I'm positioning for. I'm not going to trade this Aussie dollar now, right? I mean, if this Aussie dollar is up here, but we have all this major support, I mean, that could easily turn south again. I'd much rather scoop up dollar or Aussie dollar down here to buy extremely low. Okay. And New Zealand dollar, same thing. Like, I like these currency pairs a lot. I like the structure on these. This is the one that I posted yesterday in my Forex alerts. I mean, I want to be in the New Zealand dollar going back to, 2022. There's major support here with a nice intermediate range. I'm just trying to scoop up some levels. So if this goes up and none of these trades get filled, then I cancel, then I cancel, then I cancel, and I don't have a trade. Okay. But we'll see what happens. Pound dollar, I'm currently long and up, I think, like maybe 50 to 100 pips. Currently up around 108 pips on that pound dollar. That's fine. Dollar CAD still looking for a breakout trade. We pulled back. These are all stacked up orders. So dollar has to break above 1.40 on dollar CAD. I'm looking at a breakout trade. Also, this is another one to watch. If dollar CAD ends up going up to my measured move, that is because oil is probably breaking the floor at $66 or $67. Okay. So we'll see how it all plays out. But if there's some currency drama, Japanese yen, dollar, Aussie, whatever, I'm interested. What I might end up doing, I don't know. I'm going to be hanging out tonight, trying to think. If anything interesting happens, I might throw up a live YouTube session. Nick and the team, I don't know if you guys are doing anything for election night. Usually I don't. Usually it's just, I don't like watching the stuff, but I'll just have like basically a website up and running, refreshing it every maybe 30 to 60 minutes. See when like the big swing state votes are coming in. So Florida's declared a winner. If there's anything in Pennsylvania, Michigan, some of those big swing state votes will be important to watch. But early on, I mean, California is obviously a big one, but mostly that's a blue state. That's just a lot of electoral votes, right? But it's always, it's Pennsylvania, it's Michigan. It used to be Ohio. I don't know if Ohio's as big of a swing state anymore. Wisconsin may be. But I've got the big ones in the Midwest. You got Michigan, Wisconsin are big ones. Pennsylvania's become a major one. Iowa, used to show that whoever wins in Iowa was like declared winner, but that could be debunked. And then you got swing states in the Carolinas, North Carolina, South Carolina, Georgia, Florida, all swing states as well. So a lot going on there. Okay. Good question. Will S&P go up? I mean, it's like I said, I think a lot of it depends on how clean the election is. Not only do we have the election this week, but we also have the Fed on Thursday. Okay. We are sitting, just wrap your head around this for a second. We are sitting near all-time highs on all the major indexes except for the Russell. Okay. The NASDAQ is only from the QQQ side, our all-time highs right back up here towards July. I mean, the NASDAQ is only about, let me go here. The NASDAQ is only about 2.69% from all-time highs. The S&P is within a couple percent from all-time highs with what we just had a 3% pullback. The Dow is sitting up to all-time highs with about a 3% pullback. I mean, if this could be an extremely healthy bull market, if this is just a 3% pre-election pullback, in post-election, this market's like, off we go, bye, and here we go. I mean, that's an amazingly healthy, very greedy bull market, if that's all it is, right? But is that it? I don't know. So what I'm bracing for, and I posted a video of this, you can see it on my YouTube channel. Let me see. I mean, if you're looking for my thumbnail, I think I did this one yesterday. So on my YouTube channel, I posted this video late last night. I couldn't sleep. It wasn't like election stuff. I had like this crazy spicy Thai food that kept me up all night. It was so weird. It's like, I don't know if anybody's had like crazy hot spicy things, but it's like a natural adrenaline rush. And it kept me up all night. Like I didn't go to bed until like 3 a.m. So that was a little nuts. So I'm wired today with 0 caffeine. But anyway, I posted a video just looking at, I like all these pullback levels. I have a lot of cash at the ready. I will deploy that cash if we have decent pullbacks and discounts. It's as simple as that. Now, do I know that I'm going to get those pullbacks? No. In fact, this might be it, and this market goes higher, and that's it. And there might be limited gains to the upside, but perhaps it's enough to say, okay, we're right back up here, because now the catalyst is we have a presidential winner. Here's what we're looking forward to. And then the market likes to do this. The market likes to price things in, doesn't it? So if Trump is victor or Harris is victor, the market might look at, okay, what do they stand for? What do their policies mean for a Democratic side or Republican side? What does the market think of that? I think right now a change in administration might be a little bit more exciting for the market. So if Trump becomes president, the other thing with Trump could be, I don't think tariffs are going to be a problem until 2025. If we have a trade war situation, that could be an issue, but probably not that the market's going to vote or price it in right now. But it's going to be immediately looking for tax breaks, and that's going to be something that's positively priced in. You have the heavy amounts of deregulation. You probably see a weaker dollar. All these things with Trump are likely going to be the case. Like I said before, the concern with either candidate would be a sweep. So if the Republicans win everything, House, Senate, and presidency, that means policy change. If the Democrats win everything, that means policy change. So the markets may not love that. If it's sweeping Democrat, taxes are going to be a problem. There's probably going to be higher taxes somewhere. It's not a tax problem in the U.S. It's a freaking government spending problem. It's as simple as that. But we have a government that is recklessly spending with debt ceilings that don't exist anymore. And, this is what reality is knocking on the door at some point. What does that look like? Probably horrible global financial reset. But that's a big doom and gloom thing that hangs over the head of every investor out there that nobody knows if it's going to happen or how it's going to happen. So you can't really think like that, right? We have to trade what's in front of us. Don't be overexposed. Don't be over leveraged. Play protection, which that's what I'm doing. So I'm hedged, pretty aggressively on the downside to all the major indexes. I'm hedged with the overall portfolio to at least lessen the blow. And if I get some scoops and dips, like this is what I want to look at. If we get some decent wicks to the downside, I'm probably going to look at trying to aggressively, scoop up some risk-defined trades and then try to get this going back up. And even if it's a range trade, I realistically would be very happy to see a great healthy run that we've seen and then having some type of range that we can trade, because having support, even for the next 6 to 12 months, very tradable for me, as opposed to thinking I'm just going to go to all-time highs. Like maybe it does, maybe it doesn't. But my concern about all-time highs, I mean, the further we get away from this 200 EMA, the more that reversion and that crash is going to get bigger and bigger and bigger. So a healthier market to me is either we stay sideways here and we let these moving averages catch up and justify another round of gains where it looks like a healthy accumulation, or we see some pullbacks into some deeper levels. We offer up some discounts, and then we can scoop it up, add a discount, trade it back up to a targeted all-time high, and hopefully make some good gains to close out the year or go into Q1 of next year. Okay. And of course, everyone watching gold, everyone's watching Bitcoin. What's that going to do? Your guess is as good as mine. But what have those markets been doing so far? They've been going up, right? So, dollar, I'll watch the dollar closely. Oil, I'm not trying to play the bottom here, but maybe there's some support. I've said this before. If oil goes up, that's inflationary. Oil goes down, that's deflationary. Okay. The one thing we don't have right now, we just saw CPI, PPI, and PCE all be higher this last month, right? Through October, all those inflationary data points were higher. I keep going back to that trueflation reference. It's higher than the low we saw back in September. So I think the CPI data that comes in, for November's print is probably going to be higher. They're forecasting a 2.6 CPI. We just printed 2.4. So that's trending the wrong direction. Well, 2.6, is it, upsetting the market? Maybe not. But if 2.6 becomes 3%, right? If 3% becomes 3.5%, well, yeah, we've got crazy amounts of inflation returning. And we know that's what it feels like. We know that's what's happening, but we'll see what the data shows. Okay. So, point is, oil, I think that for inflation to remain trending sideways or lower, oil is going to have to break this floor at 67. I don't know if that's going to happen or not. But even with the Middle East conflict, we're not seeing oil prices shoot up higher. So it's clearly, really supported at like 67 until it's not. Until it's breaking. If it breaks 67, I think we drop to $60 or $55 in a heartbeat. So just be mindful of that if you're trading oil. That floor can break, so make sure that risk stays defined. Same thing is true on CL. NG continues to bounce all over the place. I'm hoping that NG pulls back, and I want to trade this over the summer next year. Gold, okay. I'm just waiting for a decent pullback on gold. We don't really have one yet. Let me check my SPX trade really quickly. Got to monitor one thing. Man, come on, dude. Like, price hasn't gone anywhere. Ugh. All right, I'm just watching this trade. So basically, here's what happens. If I see price go directional, I'll probably get stopped out in the trade. If it stays here for the morning or goes a little bit lower, I'm looking for this thing to recenter around that black line. So just got to keep an eye on it. Hopefully, it stays pretty quiet. We'll see. What else? Get out of here. Go to here. So gold. Gold's been in one of the healthiest bull markets I've seen for any stock. I mean, we've had rips and sideways allowing it to accumulate, rips and sideways allowing it to accumulate, and then the breakouts have gotten more and more aggressive. So, this nice accumulation zone breaks out, stair steps, breaks out, stair steps. So if it breaks out, is it stair stepping again just to go higher? Maybe that's it. But I'm probably not going to buy gold at these tiny little shallow 21 pullbacks. I'd like to see a 50 or 100. Now that might be wishful thinking. I might not get the entry that I want. Gold might go higher, but that's okay because I have GC and I'm long. I have GLD and I'm long, and I can benefit from those gains without having to add an arm and a leg to it. But if we get pullbacks, I'm going to add more and add some defined risk trades at those levels, probably a 50 period moving average, probably a 100 period moving average. If we come back into the 200 period, I would like this also. And again, I don't know if we're going to get some type of violent pullback like that. If we do, great. If we don't, then I'll continue to play the melt up like we've been playing all year. Silver, same thing. I'm long silver. And if we pull back deeper, I'm probably putting some more defined risk trades in. I'm looking for a measured move here at 35.88 and higher into the 40s. So target 1 and target 2, I've got that measured on my chart, I believe. Right there. Yep. So target 1, target 2 that I'm going to remain long on silver. And that's not a play on Long John Silver, if anybody likes hush puppies. Silver futures, SLV, same thing. Watching these levels. I'm exposed on both. Bitcoin, nice little daily candle on Bitcoin. The question I'm sure everybody wants to know is, are we going to break all-time highs and head up to 100,000? Okay. I see Daniel saying 120. I mean, look, I've got a trader's measurement here all the way out to 108. That's a symmetrical move based on a swing. I think that's something the market is able to get. All I'm looking to do is see, can we break all-time highs? Is there momentum there to get another bull flag or a pullback? So if we go, break out above 74,000, we have a break and a retest, or a break and a flag. Can we go higher from there? Okay, that's my first measure move. Now, that doesn't mean that I'm done. right? If we get to 107, 108, I mean, I will assess what my overall accumulation has been. I mean, I'm long BITO, I'm long IBIT, I'm long FBTC, I'm long MicroStrategy. I've got some credit spreads and ratio spreads on Coinbase. So I have some correlated, instruments there, but mainly just trading straight Bitcoin. If you're trading straight Bitcoin, you're either trading straight Bitcoin or you're trading, maybe the closest thing would be your IBIT and FBTC. Those are the best looking correlated ETFs that I can see. Okay. Yeah, MicroStrategy, it's not crazy leverage. MicroStrategy, the stock itself is not leverage, but you've got the like 1.5 or 1.75 or 2x leverage MicroStrategy, which I think is nuts. It's volatile enough, and MicroStrategy has kind of been almost leading Bitcoin in a way, but it also is, if Bitcoin's up, 30%, MicroStrategy might be up 50%. But if Bitcoin is down 10 to 20%, MicroStrategy might be down 40 to 50%. So it's extremely volatile on both sides, but it has been, kind of leading the way where MicroStrategy has pushed up to these all-time highs. I was actually looking at this yesterday during my 3 p.m. YouTube session. I was contemplating a buy at market at like 223 and then trying to put a 225 call, lower my cost basis down to like 205 or $200 and just trying to play in the game, playing the game of crazy high premiums, collecting some profit, lowering the cost basis. But I just thought, man, I'd be dumping like $150,000 into MicroStrategy, which fundamentally is overvalued. Like fundamentally, discounted cash flow model shows MicroStrategy at like $140 fair value. So I don't really like buying it at 234. Now, I can trade all sorts of options. So I've got bull call spreads and other activities there. I have ratio spreads and 1-1-1s and all sorts of fancy option strategies. So, I mean, there's ways I'm participating, trying to make some money on it without actually owning the shares. One spot that I wouldn't mind getting some ownership would be this. If we pull back to $200, I mean, that's a great spot to look to buy, right? But I wouldn't just throw 100 shares at it. I would probably do, maybe a $1,000 to $2,000 position. And if it pulls back more, like again, you could treat this one with simple dollar cost averaging. Area 1, if we pull back to past resistance or pull back to some nice dynamic support, this would be another position. So let's just say position A, position B, position C. And then, I mean, again, longer term, I think for MicroStrategy to go to all-time highs yet again, you're going to have to see Bitcoin going higher as well. So it is pure speculation, but I think MicroStrategy is a good proxy to have like basically leverage Bitcoin trading without actually going to the MST. What is, somebody knows, everybody should tell me what this is, but there is a leverage ETF that just trades MicroStrategy at like 1.5 or 1.75 or 2x leverage. And I just think that's nuts. So I'm not interested. I hate leverage instruments like that because their repricing can be so violent. Anyway, so that's that. Copper is going to have to take a play out of China. If China is up, then I think copper has a good opportunity to go higher. I'm not doing anything to copper. The straight up like risk reward was about 1-to-1. I didn't really get an edge there, so I didn't take a trade. But to me, copper, I think the big deal on copper is we have to see some global optimism. And I think with the U.S. looking good and China trying to offer the stimulus and lift animal spirits, if U.S. and China are both looking good, I think copper is a very solid play. If U.S. is up but struggling to make significant higher highs and China is still indecisive, if China's like meh and U.S. is meh, then I don't think copper's a good play. So, I mean, this was a good play in copper. When we had this ABC correction, that was a great trade in copper. But from this point forward, I'll wait and see. If it's more of a range trade, maybe a copper range trade, then see if I can scoop up some support. So I'm not forcing any trades right now. The reward to risk wasn't that great. Yeah, MSTX. Yep, correct. PL. Yeah, what is that? Is that platinum? Yep. Platinum futures. I've got a box drawn in this one. There's just a lot of chop. Now let me go to the weekly time frame here. So my broker doesn't have platinum futures, or else I would be doing probably some out of the money credit spreads, because I think this level around 860 is looking pretty attractive. 860 to 800 looks really good for a buy zone. We also have a potential, kind of a wedge in here that's going to coil and have to make a decision. It doesn't have to. I mean, this could go sideways and go long, and it doesn't really do anything. But eventually, if all this does is carve out a bottom, then I do think that, higher inflation, weaker dollar, better commodity prices, scarcity. I mean, who knows? This could be a lot of things. But if I'm scooping up some defined risk trades, I mean, bull put spread right here, or even a naked put. I wouldn't want to take assignment, obviously, but a naked put and just go after partial profit. I think in this kind of 850 to 800 zone, I like that level to be, holding some positions, collecting some premium on platinum. So if I could trade it, I would. But right now, I'm seeing it's up 1.62% today. It still hasn't really gone anywhere in the bigger picture, so I don't see much happening there. Other than a range, like if you can scoop up some lows, I'd like the price. I'd rather be long than short on platinum. Palladium, also some volatility, but my broker just let me trade this one, so I'm just waiting to see. But I like this one back at 905. This is corn futures, same thing. Do we come back down to these multi-year lows? Soybean futures, same thing. We come down to these multi-year lows. CC is cocoa. Just this was more of like a spectacle because it had such a ridiculous run early in the year. Now it's extremely choppy. And then also I should put ZB in here for bonds. Let me put that in here. So ZB should be our treasury bonds. Speaking of bonds, I want to go to seeing that the 10-year is, oh my gosh, you freaking a-hole. 10-year bonds up to 4.36. We're up 1.7%. Look at the daily chart. It was down like 2% yesterday, and now it's right back up. So again, this could be election stuff. We got the Fed on Thursday. The Fed is likely going to cut. We know that probability is extremely high. We'll see what the language looks like. So CME watch tool, 97.3% chance that Thursday we get a rate cut. And then if the Fed is vocal about another one, that would be cut for Thursday, and then the 18th, cut for the 18th. January, potentially a pause going into the new year. So we'll see if there's language around the press conference on Thursday. Hopefully, like I said, there's not a bunch of election drama to go with that. We'll see. But, it's not the Fed's job to comment on who's president. I don't think it's going to matter. I don't know. And that's another thing. Like the Fed could be, I don't know. I mean, Jerome Powell could be kept as chairman, fired as chairman. There could be some, I don't think you've got the authority to like denounce the Fed. Oh, I just got stopped out of my SPX. What, dude? That thing barely moved. All right, that sucks. Let me update that. So that trade is trade one, $2 credit. Okay, 1 second. Oh, well. Okay, so this is okay. If the U.S. economy is going to get in some trouble, if U.S. economy is going to get in trouble, this 10 years is going to continue to rally. What goes with that? Auto loans, student loans, mortgages, anything that's 5 to 30-year financing will pretty much be using the 10-year as its proxy. So this doesn't mean like, oh, the 10-year rate's going to be 4.3 or the mortgage rate's 4.36%. No, not even close. Because right now the mortgage rates are sitting back around 6.72 to 7%. So they were when we had a low right here in the 10-year, mortgages are about 6.09, and they've ripped up by about 70 basis points. And so we're looking at like 6.7 to to 7% right now in mortgages. This could be something that absolutely crushes the economy. If this goes higher, whether it's 5% or higher than 5%, I would expect a much more crippling event if this 10-year yield does not stop surging. The other thing that's a bit scary would be taking a look at the disinversion. Look at how aggressive this 10 and 3-month is being. This is a 10-year versus a 3-month. This thing has been on a mission to get back towards that zero line. We've seen that the 10 and the 2-year got disinverted, but I'm way more concerned about this 10-year and 3-month being disinverted. You go back historically, this has always been an undefeated indicator when it comes to recession. Go back to 82. Anytime we've gone from inversion to disinversion, there's always been some hiccup, recession, some slow growth period. And so as we got into one of the deepest inverted yield curves, and now we're coming out of that, I mean, nobody can model this. Nobody knows what this does. Is this going here for a big question mark? Are we going to actually see this go lower somehow? I don't know. But I'm legitimately worried about, once the 10 and the 3-month get outside and get disinverted, that we might have some trouble ahead. So just saying, it's been a good run, but we'll see just keep an eye on it. Right now we're about 34 basis points from the zero line, but if this keeps just ripping to that zero line, which it has been since September 18th, this looks like a, inverted yield curve on a mission to disinvert. So we'll see what it does. Okay, really quickly, I'm going to take another stab at something here. Trade SPX today. If I go so annoying. All right, what else do we have here? China's looking fine. Take a look at some currencies, individual stocks. We got a bunch of earnings today. I priced out a couple. I in my chat. Let me see here. In my chat, in my trade alert section, let me talk about the trades that I just added in really quickly. So New Zealand dollar, pound dollar, my recent currency pairs. Index trades, I did the RSP QQQE today. DJT, that was another trade I did in the stock section. BRKB, I added that in yesterday. MSTR, I'm in that as well. Those are dollar cost averaging levels on MicroStrategy to buy in a couple levels, just small, looking at $1,000 chunks. Tesla, I'm still on that one. Actually, I want to take a look at Tesla. Tesla trading at 250, what? 251? 251. So I have a 250 by 255 bull call spread. I've got the 270 by 265 bear or bull put spread. So this is a credit spread. Credit spread here, debit spread here. If Tesla goes higher, that one pays. That one pays. If Tesla goes lower, I use this one to own the shares. I want to own the shares, low 200s, work the cost basis down aggressively, and try to flip this thing for at least $10 if I can. I'm going to try to flip it for at least $10 a share. That'd be $1,000. Okay. If I go to what else? I had one in mind. Oh, NVIDIA. Yeah, somebody said NVIDIA. So NVIDIA at 139. This is another stock that I'd love to see some pullbacks. We're sitting here at equal highs, or just that little false breakout. I'm not saying NVIDIA can't go higher. Okay. The only thing that I saw in NVIDIA was how far away it was from the 200 EMA and coming back to the same high again. If it struggles to make higher highs, okay, or just slowly gains higher, but we see all these moving averages catching up, I just like to use them for some dynamic support. So there's a couple levels I'd like to see. We get a pullback towards the 50 or 100 EMA. Even if we test the backside of this trend line, I wouldn't mind scooping up some NVIDIA there. Probably do option trading. I would probably do bull call spreads, bull put spreads. I've got ratio spreads way down here. When that July and August event happened, I was doing some pretty heavy premium selling. So, I mean, those are likely going to hit for full expiration. If I ever took ownership, it'd be like sub $80. I'd own it at like $80 to $75. So I probably have to. I mean, those are all looking good for profit. Nvidia, without owning a single share this year, has paid okay. Oops, I go Nvidia. Nvidia positions. So I'm up around $4,900 without owning a single share. So obviously, if I own shares, it'd be like, oh my gosh, you'd kill it this year, but I didn't. And also, by the most of the time I was trading Nvidia, it was a $500 or $600 stock. I wasn't that interested. It got up to $1,200. I'm not that interested in buying the shares. Dollar cost averaging is one thing, but since they did the 10-for-1 split, I became a lot more active on it because now, yeah, I've got the capital to buy it. So anyway, so I want to see some pullbacks. That's it. I mean, it's pretty simple. I'd like to see a test of the 50 or the 100 before I get some defined risk trades in. If we somehow pull back deeper, great. I still think it's well supported. I think this is now a major part of the S&P, major part of the NASDAQ. It's pretty much carried the weight of the S&P this year. I want to say I could be off by a little bit, but I think almost like 1/3 of the gains this year in the S&P were produced by NVIDIA. Just because of the market cap weight, how large the company has become. It's basically between 1, 2, and 3 largest in the world market cap wise. And because it was up like 100+%, it's responsible for a majority of the gains we saw in the S&P because of market cap weighting. So it's obviously meaning a lot. It's one of the more important stocks to be watching for the rest of the year. We also have earnings coming on NVIDIA at the end of the month. So this is going to be an interesting time. We'll be through the election. We'll be through the Fed. We'll have earnings season winding down at that time, but we'll be right on the cusp of holiday trading. So if, I would say if NVIDIA is offering any discounts going into earnings, I would be glad to do some trades around earnings. So I'd like to get some pullbacks. That's all I'm saying. A lot of the stocks, even gold, a lot of the stuff, it's like, give me a pullback, give me a wick, give me something. And I even tried to price out. I think it's safe to say we're going to get and expect some volatility this week, right? I even priced in a reverse iron condor, which would be I buy a call and buy a put, and then I sell a call and I sell a put, and price just has to go outside of this volatility area. Now, to do that, I'm essentially going to have to pay $8 for every $10 of max profit. So it means I get a profit of $2 to risk $8 to go play volatility. I'm not going to do that. I just think those prices are outrageous. So I'm just going to wait. If we go higher, I look at it this way. If we go higher, this is the easiest thing. It's a melt up. Okay. If it's a melt up, enjoy it. Most of you are probably already long in your portfolio anyway. So if it melts up higher, it should get a lot easier to watch some more gains. If we have a pullback, that's what I'm actually hoping for, because then I'll start allocating more dollars. This would be fresh capital on the table at discounts. And I'm not saying it can't get ugly. That's what nobody knows. This event from July to August was pretty darn scary because it happened in literally 3 days. You had this little turn, and then in 3 days, the market sold off almost 9%. That's a lot, So it almost felt like a rush to the exits, as opposed to, melt up is pretty easy because it's slow and steady. To the downside, we could have some, election volatility and some crazy drama. But if we don't have it, then enjoy the melt up, and the rest of the year probably looks pretty easy. Because at this point, Fed's going to cut, market's set in motion, market's going to make higher highs. Seasonality is something that a lot of traders and investors rely on. And that being said, it's like, okay, so what do? You just enjoy the run, enjoy the melt up. Okay. So I will say this. I mentioned this last week at a live session. I said it yesterday, I think, the day after the election. So I would say this. If we have a winner declared tonight and the market closes green tomorrow, I think that's a good indicator that we're going to be bullish for the next couple weeks. If the close tomorrow is red and we have a declared winner from tonight, I think that's an indicator that the market might pull back over the next couple weeks. Now, whether that affects the overall end of year target, I don't know. But there's been an interesting trading phenomenon through the election years since 1996 that you get about a 2-week run of direction on the Wednesday close. So there's going to be a lot of jockeying after today and tomorrow. I'll see what it looks like. So I'm just willing to wait. Cash at the ready on pullbacks. Melt up is easy. Just let your positions do their thing. Higher highs are good. Okay. Who do I don't really care. I mean, honestly, it's like, well, I mean, South Park, I think, does it best. If you ever watch the South Park election episode, that's pretty much my thoughts on this whole thing. So I think Trump is way more of a disruptor. I'm sure that typical politics don't love it. He's crazy enough and rogue enough and unpredictable enough. It's scary for everybody. But it's also not. It's not the machine. So there's pros and cons to each side. I just wish it wasn't Donald Trump, who I never thought as a celebrity reality TV show, kind of false billionaire narcissist would be a president. But here he is. The guy's basically the human version of PFAS and Teflon. I mean, I don't know how nothing sticks to the guy, but he's still running for president. He's one choice of two. So I feel like this is probably the lowest point in my voting history of like, I hate that we have to vote for these two. I wish I could just put in write in no confidence and see if that would actually be a vote that took national interest. That'd make me happier. Because I feel like if you could vote no confidence for DC in general, I think that would speak more volumes to see what the countries may be feeling. Okay. And that's what's funny is look at how sensitive that topic gets. Does it matter? It doesn't matter. Okay. I think what's crazy is how this has divided our country just on that conversation. You should not be opposed to having this conversation with friends, with family. Like, politics shouldn't divide your household. Politics shouldn't divide your family. Nobody has cared about government ever. It's just something that exists. But now it's so big and it's everywhere and it's invasive and it's everything we do is it's government. So I think that's the only the good thing that Trump has is he's such a disruptor that it's not the status quo. So I just don't know how anybody can look at that guy's history and say like he should be president. But is it better than Kamala Harris? I don't know. Maybe. Could we have inflation? Are we going to have fiscal spending? Probably on both, right? What I'm seeing right now is Democrats will probably spend $4 trillion in the next 4 years. Republicans will spend $6 to $7 trillion in the next 4 years. Either way, fiscal spending is out of control. We've collected 63% more taxes and we spent 93% more of the government. It doesn't end well, however it looks. So a president is not changing anything, right? We have checks and balances. So the one thing that would happen for change would be some type of sweeping Republican win or sweeping Democrat win. That's where policy changes. But if it's Trump president with gridlock, nothing really changes. The extreme policies that are being proposed will never take shape. And same thing on the Democratic side. Extreme policies that will take shape will never materialize. So markets like gridlock more than anything else. I mean, Nick, I think it posted that on Instagram. I mean, the markets actually like indecision. Not indecision, they like gridlock. So just no major disruption in policy. So we'll see. So like I said, all I'm saying is I'm not here to be political. I just think it's you have to look at how sensitive the topic has gotten. That's probably the most disruptive thing is how it is completely making people so sensitive, so angry about just the topic. It's crazy. Like that to me is crazy. So it feels weird. And I don't mind having those conversations. I'm interested to hear why people are voting one way or the other. But it doesn't change the opinion of the person. So that's what's just a little upsetting is that it's now like very much like toe the line. It's all in. It's crazy to me. It's like, where's the middle? Where's the compromise? Where's bipartisan? That feels like it's non-existent. And that's probably the most upsetting thing for me as a voter is I don't feel like there is a middle anymore. So that's it. All right. On that note, let me see here. So I'm looking at something on the SPX. That's so freaking stupid. Piece of garbage. I just got stopped out here. This trade now is trading at what a turd. I'd be upside down about 15 to 20 cents instead of taking a hit on that one. But the call side got threatened, so whatever. I mean, that's my strategy. It got busted. So I took a small loss on SPX. I'm just gonna let it settle in. I'll probably grab something later in the day, make up for it. Just take a couple plays. All right. On that note, look, there's a lot more to happen today. U.S. elections coming, whether you like it or not. We got the Fed on Thursday. We got a lot of companies reporting earnings in the background. I posted a decent amount of trades in my Pulver alerts. To the point. Let's see. MicroStrategy has some BRK.B, so that's Berkshire Hathaway, the B shares. Forex trades I put in New Zealand dollar, pound dollar. Index trades I put in today RSP, QQQE, DJT. That should just go in the stock play. That's the actual Trump stock essentially. I put a 34 by 35 bull call spread. It's 61 cents on the dollar for profit. So if it's right, all I need price to do by next Friday is be up above 35 bucks. That's a pretty good trade. So if he wins, I would assume this stock goes higher. This thing's been crazy volatile. Based on his polling, based on Trump's polling, this stock has ripped to the upside like a ton, and then it got halted to the downside several times. So it's a complete calculated risk. If Trump wins, then that probably, to me, I thought this was better than jumping on Robinhood, jumping on Polymarket or Kolschi and some of those other like betting apps or whatever. It's like, look, I'll just trade this. I'll take a risk at it. That's my way of kind of throwing in some money to say if he wins, I'll make some money, right? But also my entire portfolio. If he wins, I probably make some money. If Kamala Harris wins, I might make some money. I don't know. So price is going to do what it's going to do. I think the thing that's helping me sleep at night is I've got hedges to the downside. Okay. So if the market drops, I'm hedged. Okay. I'm looking for opportunities to buy in more. I'm hedged to the downside to take some near-term profits and offset some of the drawdown. If we go higher, that's easy. This is easy street. If we go higher, that's easy for everybody. If we go lower, that's what separates the traders from the wannabes. So I'm prepared for the downside in case we get it. Otherwise, it's part of doing business by hedging and protecting the portfolio and then waiting at the ready to hopefully scoop up some good discounts if we get them. It's pretty simple. Okay. All right. Out there, I'll wrap it up here with what Ray Dalio says. Save more than you spend and be kind to everybody. Be nice to everybody. That's probably the best way to live. So don't let politics divide you. Don't let religion divide you. Just, have some human decency, be nice to everybody. And it's, last time I checked, it's one planet that we live on that we're probably lucky to be here. So go enjoy it. I think life's too short to be pissed and angry and stressed. So let's try to make some money. Let's see what happens with the election, and I'll see you tomorrow. Thanks. Bye.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, Pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.